Hey guys, welcome to a new daily market outlook in which we're going to be discussing the major dollar pairs alongside gold. So let's dive in, see what's going on, and let's just analyze what the market has been doing. Okay guys, so for the dollar index at the moment, what I'm pretty much focused on is this area of supply over here, this bullish candle, and we also have some more areas of supply, for instance, inside here. So what I'm pretty much just waiting for are for those levels to get hit. For me, there's not really any logical turning point in the market at the moment. Quickly diving in towards the daily, we're just seeing some bullish order flow. At the moment, what we're seeing is probably a reaction to support and resistance. I personally think that we still need to move up a little bit higher, at least in towards this area of daily supply. And with this area, I mean this area over here. So that's pretty much what I'm going to be waiting for on the dollar, just waiting for higher prices before potentially finally that pushback down in towards this area of demand. That's pretty much it from the dollar. Let's head over to our next pair, which is of course Aussie dollar. And Aussie dollar, guys. So Aussie dollar has been moving pretty interesting. If we quickly dive in towards the daily, what we can pretty much see is that we've been reacting to, and it doesn't load, but to this area over here. So this bearish candle, which got engulfed, took out this high over here. So this is essentially an area of demand within the market. And as we can see, we're currently reacting to it. Now, let's say we dive in towards the 4 hour. What we can then see is that the 4 hour is stacked with that daily. So what I mentioned yesterday was that liquidation was most likely going to happen, as we can see over here. So we could potentially now see it move up higher in towards this supply zone before looking for further downside. If of course we see lower time frame trend switches within that area of supply, because the 4 hour is still bullish, so you can't just randomly start selling from this line over here, because otherwise you'll be counter trend trading. Just keep that in mind. So what we need to see now is this high to get gained. If this high gets gained, I'm pretty much confident that we will move in towards that zone. But as long as this high is respected, I am still bearish on Aussie dollar, and we could just react to this area of supply and see further downside, which is in line with the daily and the weekly trend. Don't forget about that, because the 4 hour may be bullish, but the daily and the weekly trend are bearish. So this is definitely an area where we're expecting a reaction from, and as we can see, we are getting that reaction. But just keep in mind that this area of supply could push price further down. So that's Aussie dollar. Let's head over to Euro dollar. And Euro dollar, guys. So Euro dollar is pretty interesting, just being a little bit slow though. But overall, what do we know of this market? Well, this essentially is your area of supply, however, not a strong area of supply because it hasn't achieved anything. Furthermore, this is your area of demand, this bearish candle over here. Let me just put a zone on it. So over here you have your area of demand, and essentially it's pretty much the same as on Aussie dollar, right? So higher time frame is bearish with the daily and the weekly, and the 4 hour is bullish. So what we are expecting is definitely a reaction from this green zone. Then wait for a lower time frame trend switch, because we're now bearish on the lower time frame, of course. And then you could potentially trade it back up in towards this supply zone, and then from that supply zone, again, you wait for a lower time frame trend switch, or we'll see trend continuation up in towards that highest area of supply. So I'm just going to be trading from these two areas of supply and demand, and then purely based on what the lower time frame does, do I know what to do once price comes in towards this zone? Just keep that in mind. So that's Euro dollar. Let's go to pound dollar. And pound dollar has been moving down lower. Pretty much not that much going on. We're inside this area of demand, and as we can see, we saw a reaction. Pretty nice to see. Currently just slowing down, kind of forming this wedge formation on the lower time frame. If you dive in towards the 4 hour or the 1 hour, on the 1 hour you'll see this more clear. Wedge in towards demand. We could start breaking out, but we need to take out this high over here, because once you gain this high, you have a lower time frame trend switch, and then you could potentially start looking for those longs back up in towards supply, and then potentially short again from there. But we have to keep in mind, again, just like with Euro dollar and Aussie dollar, that the higher time frame is bearish. So taking longs at this high in value on the higher time frame, and why do I mean like this high in value? But if we look at the daily, we're very high in towards the daily pullback. So still taking a long around the 786 fib is just very risky, especially if it's also not stacked with an area of interest on the daily, such as this one over here. So just keep that in mind when looking for those potential longs. Yeah, that's pretty much it for pound dollar. Yeah. So yeah, let's head over to our next pair, which is Kiwi dollar. And Kiwi dollar. So Kiwi dollar took out our area of demand. As we can see over here, we wicked through it. So potentially Kiwi dollar is going to start heading down lower. I don't really like it when these areas of 4-hour demand or supply get taken out. This is now your area of supply. Yeah, so look, because this area of supply took out this area of demand, essentially this is where you want to be looking for shorts from. However, just keep in mind the 4 hours still bull and the daily could still see a further pullback. So this is a risky short, but let's say you see a trend switch inside of it, like you come in on the 15, then you see this kind of happen, low break, then you could look for those further shorts down. Just keep in mind that this is a high probability sell over here. And yeah, essentially once we've broken this low, let's say we just start crashing down, then market comes back up, then you want to be shorting from these areas. Because then it's in line with the 4-hour, the daily and the weekly trend, and just going to be a much higher probability setup. So yeah, that's Kiwi dollar. Let's over to our last pair, which is gold. And gold, guys. So gold is still just consolidating. Diving in towards the 1 hour, yeah, we can clearly see just consolidating, moving pretty slowly, going back in towards the 4 hour. Yeah, a lot of people trying to trade this. Yeah, you can trade it. I personally don't really like trading this kind of mess, purely because it's just, yeah, more kind of gambling. But if we look at the 1 hour, we're like in the lower 25% mark of the overall range. So you could look for longs over here, trade it back up a little bit higher to at least take out these two swing highs. I do think we're going to take out those two swing highs very soon. Clear liquidity above the highs, potential tap in towards supply, then a sell-off, or we're going to move up higher, take out liquidity above this high, because this high hasn't been taken out by all of these highs. So I still think that it would be best for gold to take out the highs above 1831.80. Just keep in mind that you could potentially see shorts if we just take out these two liquidity highs and tap in towards supply over here. So yeah, guys, that is pretty much it for today. Thank you so much for tuning in once again. If you have any questions whatsoever, feel free to contact me through Discord, and I wish you all a fantastic day. Thanks, guys.